Hey everyone. If you're listening to this, you're probably just as puzzled as we are about all this talk about tariffs and trying to figure out what it all means, right? It's a pretty complicated issue, that's for sure.
Absolutely. And that's why we're here today. To take a deep dive into this whole world of tariffs, we'll try to understand what kind of impacts they could have, the reasons why anyone would even want to implement them in the first place, and the core issues that are driving all these discussions, right?
Yeah, like where is this all coming from? To make sure we're looking at this from all sides, we've actually gone through a whole bunch of different sources. Transcripts from CNN, MSNBC, BNN, Bloomberg, CBC News, even delved into some YouTube channels like the Prof G Pod and the David Pakman Show.
Oh, and of course, we got to get into the nitty-gritty. So we've also got these in-depth articles. One's called Tariffs and American Economic Protection, and the other one, Trump Economic Policies, Industry Impact Analysis and Projections.
All right, got to get that deep cut analysis. The point of all this is to sift through all the jargon and give you the core information about tariffs, from different perspectives.
Right.
So you can understand what's happening and why without getting bogged down in all the technical details.
Exactly. We're shooting for clarity here.
All right, so let's jump right in. One of the biggest things that's happened recently is that tariffs on steel and aluminum coming from Canada have doubled. And what makes it even weirder is that this happened even though there's already a trade agreement between the U.S. and Canada.
And the really interesting thing here is how the financial markets reacted. Instantly. The stock market took a big hit. We saw the volatility index, which basically tells you how much the market expects prices to swing around, just shoot up.
So it's like a measure of how nervous everyone's getting about the future.
Yeah, exactly. And along with that, the Dow Jones Industrial Average took a pretty noticeable dip. So, this really shows how much uncertainty these actions create in the economic outlook. Investors hate uncertainty, right?
Makes total sense. And this isn't just abstract numbers. We heard from Art Hogan, a big market strategist. He was pretty blunt about it. He said the market's blatantly sick and tired of the back and forth on trade policy. Basically, he was saying that people are frustrated because the rules keep changing all the time, and it makes it super hard for investors to plan for the future with any confidence.
Makes sense. If you don't know what the rules are going to be tomorrow, how do you even start playing the game?
Right. And what's interesting? We haven't really heard much from the former president on this whole thing.
Yeah.
Which is kind of weird, because usually he's pretty vocal about economic stuff.
Right. That's what makes it kind of intriguing. It's sparked a lot of questions on Wall Street, Even some analysts and some Republican supporters are starting to wonder what the motives behind all this are. And, some are even speculating, and this is pretty out there, that maybe, just maybe, there's a deliberate attempt to kind of trigger a recession to bring interest rates down. It's a long shot, but...
That's a pretty wild theory.
It is, but it shows how much confusion there is right now.
Definitely. And one thing's for sure, that Trump effect on the stock market, that everyone used to talk about as a good thing, that's pretty much gone now.
Poof. Vanished. And this brings up a big question. What was the goal here? We've seen how worried people are domestically, what with the market reaction and all. But internationally, the response, especially from Canada, has been really strong.
Oh, yeah. Canada is not taking this lying down. Premier Doug Ford even mentioned that they might stop exporting electricity to some U.S. states as a way to fight back. And the Canadian foreign minister has been very clear that they're ready to challenge these tariffs and even reach out to their European allies for support.
Totally. And from what we're seeing in the news, the Canadian view is basically that these tariff increases are totally uncalled for and that they're going to end up hurting both economies. Although because of the huge trade relationship between the two countries, Canada might get hit harder. There's even a theory floating around that the former president might be trying to weaken Canada politically on purpose, to drive a wedge between the two countries.
We even heard the White House press secretary say that Canada has been ripping off the U.S. for decades, which Premier Ford straight up denied. He called it absolutely untrue and emphasized the long history of good economic and military cooperation between the two countries. It's pretty clear that there's this fundamental disagreement about what the trade relationship actually is.
Yeah, it's like they're looking at the same thing but seeing something completely different. The White House is saying these tariffs are necessary to fix unfair trade practices, while Canada sees it as an attack on a partnership that's been good for both sides for a long time. So I think we need to back up a bit and make sure everyone understands the basics here. What exactly is a tariff? And who actually ends up paying for these taxes? Because there's a lot of confusion about that.
Yeah, let's break it down. What exactly is a tariff? In simple terms.
Okay, so basically, A tariff is a tax that a government puts on goods and services that are brought in from other countries. So, like, if Canada wants to sell steel to the U.S. government can slap a tariff on that steel, making it more expensive.
Okay, I get that. So the White House is saying this is a tax on foreign countries, like they're the ones who got to pay. But I've also heard that it's actually the people in the country that's importing the goods who end up paying more. So who's right?
Well, most economists will tell you that it's the people in the importing country who end up footing the bill, at least for the most part. They're saying that the cost of these tariffs gets passed on to domestic consumers. So, in this case, it would be American shoppers who end up paying higher prices.
Okay, so like if I go to buy a car that uses imported steel, the price of that car is going to be higher because of the tariff.
Yep, that's the idea. And this can really hurt lower income households, because they often depend more on those cheaper imported goods for their everyday needs. Now, some people are saying, well, the money the government gets from these tariffs can be used for tax cuts later on. But that's kind of misleading. The tariffs themselves aren't a tax cut. They're an extra cost.
Right, so it's like taking money out of one pocket and maybe someday putting some of it back in the other pocket.
Maybe, exactly. And there's no guarantee that everyone will get their money back. You know what I mean?
The former administration talked a lot about global trade imbalances and how the U.S. has higher tariffs on its exports compared to what it puts on imports. So there's any truth to that?
Well, historically, yeah, the U.S. has kept its import tariffs pretty low compared to some other countries. This was a strategic decision they made over many years, partly because they wanted American consumers to have access to a bunch of different products at good prices. And it's true that some developing economies use higher tariffs to protect their industries while they're still growing. And if we look way back to the 19th century, the U.S. actually had much higher tariffs themselves to help their own industries get started. But comparing the current situation to those times or to much less developed countries doesn't really paint an accurate picture.
Right. It's like comparing apples and oranges. We also heard from a car dealer who gave a really clear example of how these tariffs can impact businesses.
Yeah, that interview was really eye-opening. He explained that tariffs on things like imported auto parts can make the price of cars go way up, like thousands of dollars, sometimes even tens of thousands. This can make cars too expensive for a lot of people, so they just sit on the lot and the dealerships lose money.
So it's not just about the final price tag for consumers. It messes up the whole system of businesses that bring these products to market.
Exactly. It's like throwing sand in the gears of a very complex machine. These tariffs make imported parts and materials more expensive, which drives up the cost of making things for American companies. This extra cost, plus all the uncertainty about what's going to happen next with trade policy, makes investors nervous about economic growth.
Right, so everyone starts pulling back because they're not sure what the future holds. Okay, so let's try to understand why these tariffs are being put in place. What's the reasoning behind them?
Well, David Frum, a political commentator, offered a really interesting perspective. He said that the former president seems to believe that countries get rich by taking from others, not through trading with each other. It's a very different way of thinking about international trade compared to most economists.
So it's like a zero-sum game, where one country wins only if another one loses.
Exactly. And it's a pretty controversial viewpoint, but it might explain some of the decisions we're seeing.
And from what you've read, is there like a clear long-term plan behind these tariff policies?
Honestly, most of the sources we looked at don't seem to indicate a big, well-thought-out strategy. It kind of feels like for the former president, the tariffs themselves are the goal, rather than a tool to achieve something specific.
Interesting. And you always hear the argument that these tariffs are meant to bring manufacturing jobs back to the U.S. Is that actually happening? Or is it even likely to happen?
Well, that's the stated goal. But even groups that usually support protecting American industries, like the United Steelworkers, are skeptical. They're worried that these tariffs on steel and aluminum will actually make American manufacturers less competitive because their costs will go up. And those higher costs are going to get passed on to consumers, meaning higher prices for everyone. So it's like they might create some jobs in one area but hurt other areas of the economy at the same time.
It's like a seesaw, up on one side, down on the other. What about the argument that tariffs are needed because other countries aren't buying enough American cars?
Well, that's another point that's been made. But selling cars internationally is a lot more complicated than that. Things like gas prices, what types of cars are popular in different countries, and just general consumer preferences play a much bigger role than tariffs. You can't just slap on a tariff and expect everyone to suddenly want to buy American cars.
Right. It's not a magic bullet.
Yeah.
Some people might argue that the former president knows all this, that he's deliberately causing short-term economic pain because he believes it'll lead to some huge long-term gain. Do any of the sources back up this idea?
Well, that's a theory some people have, but the negative effects we're already seeing, like the stock market dropping and the worries about a recession, show that the pain is real and it's happening right now. And historically, tariffs have often led to inflation, which can then be followed by economic slowdowns or even recessions.
Yeah, we've seen that pattern before. It's like a boom and bust cycle. And it's pretty interesting that the former president used to always point to the stock market as proof that his economic policies were working. But now that the market's reacting negatively to these tariffs, he doesn't seem to care as much.
It's a pretty noticeable shift, isn't it? Like when the stock market was up, it was all, look how great I'm doing. But now that it's down, it's like, well, the stock market doesn't really matter anyway.
It's like the goalposts keep moving. We've also heard some pretty strong language used in these trade talks, like hints that Canada might become part of the U.S. Is that just political talk, or could there be something more serious behind it?
Some analysts are saying we shouldn't just brush it off as a joke. They're saying it might actually reflect a more aggressive, maybe even imperialistic attitude in American foreign policy. The idea of intentionally weakening Canada, both economically and politically, might be a real goal for some people.
Okay, that's kind of scary. So with all this going on, what are some of the bad things that could happen because of these tariffs?
Well, there are a lot of worries about a potential recession, both in Canada and the U.S. The uncertainty created by these tariffs can make businesses and consumers hesitate to spend and invest, which slows down the economy. The Atlanta Federal Reserve even released a report recently predicting negative GDP growth, which is a big red flag.
So it's not just the direct effects of the tariffs, but the general feeling that no one knows what's going to happen next.
Exactly. It makes everyone nervous. Economists call this freezing soft, where businesses and consumers put off making big decisions because the future is so uncertain. And then there's the possibility of retaliation from other countries, which could lead to a full-blown trade war. That would be really bad for a lot of sectors of the U.S. economy, like agriculture and manufacturing.
We kind of saw this happen back in 2019, right?
Yeah.
The previous tariffs.
Yeah, that was a pretty similar situation. The economy slowed down in 2019, mostly because of those earlier tariffs. And even though there were tax cuts that helped boost consumer spending, it wasn't enough to offset the negative effects. The Federal Reserve even had to lower interest rates a bunch of times to try to get the economy going again. Economic models show that this kind of uncertainty caused by trade wars can really hurt economic growth in both countries.
And are some parts of the U.S. economy more vulnerable than others?
Yeah, definitely. Studies show that retail is going to be hit pretty hard because their costs for imported goods are going up. Agriculture is also vulnerable because other countries often retaliate with tariffs on agricultural exports, and the energy sector might see their infrastructure costs increase. Also, industries like construction and housing that rely on imported materials like steel and lumber will definitely feel the pinch.
So basically, a lot of key industries are going to get squeezed. We also heard some people using the term animal spirits to talk about all this.
Oh yeah, animal spirits. It's a concept that pops up sometimes to try and explain why the markets are doing what they're doing. It basically means that investor behavior isn't always totally rational, that emotions and psychology play a role. But a lot of analysts are saying that the current market downturn is a pretty logical reaction to the very real risks created by these tariffs.
So it's not just that people are feeling panicky, it's that they're seeing real problems on the horizon and reacting accordingly.
Exactly. It's like they're not just being scared, they're being smart. And it's kind of strange, the White House is talking about how these tariffs will lead to more business investment in the long run, but the markets and a lot of business leaders are freaking out right now.
It's like they're not buying what the White House is selling.
Nope. And some people are even saying that these trade actions might be a way to distract people from other problems, like the growing national debt.
So it's like a smokescreen, trying to shift the focus.
It's a theory, but it makes you think. One thing that really struck me is that the U.S. economy has actually been doing pretty well lately compared to other developed countries. So how does that fit with the idea that the U.S. is being taken advantage of in global trade?
Yeah, that's a great point. The U.S. economy has actually been pretty strong by a lot of measures. So it makes you question whether these drastic tariffs are really necessary.
And one final and kind of unsettling thing that came up is this idea that these policies are connected to a bigger problem. a lack of critical thinking. Can you tell us more about that?
Yeah, it's a really interesting idea. Some people are saying that the real danger isn't just the specific policies, but that it's becoming less and less able to think critically. They're saying that when people stop questioning things and just blindly follow what they're told, it can be a huge problem. It makes them more vulnerable to bad ideas, and that can have really bad consequences for everyone.
Okay, so after going through all this, what are the key takeaways? What have we learned from this deep dive into tariffs? Well, to sum it up, tariffs are complicated things with the potential to cause a lot of problems. The recent tariff decisions seem to be driven by a bunch of different motives, and they're creating a lot of uncertainty and anxiety.
And it's clear from the sources we looked at that there's no consensus on whether these tariffs are going to work or even why they're being implemented in the first place. A lot of experts are worried about the damage they could do and the fact that there doesn't seem to be a clear plan.
And that brings us to our final thought for you today. After hearing all this, what do you think is the main reason behind these tariffs, and what do you think the long-term effects will be? And more importantly, how can we use critical thinking to evaluate these complex economic decisions? We hope you'll continue to explore these important questions and come to your own conclusions.